So Stephen, just a disclaimer, this is going to go out to over 100,000 people, so what we say will be public. Few disclosures. Stephen and I have known each other for well over 10 years. We have very close mutual friends. And so Stephen, let's start on your background. Let's start just before you became president at Teck, which is Canada's largest diversified miner.
I've been in the business for about 35 years. I was one of the founding partners of a group called Normandy Mining in Australia. It grew from about a 10 million market valuation to about a $4.5 billion valuation when it was sold to Newmont. It owned the super pit amongst other assets in Australia. It was the largest gold producer in Australia. We did something like 12 or 13 M&A transactions over a period of about 9 or 10 years. And after it was sold and when I left Normandy, we started a company called PacMin or Pacific Mining Corporation, and we grew that to just under 300,000 ounces of production. And as part of a transaction with Teck, Teck became the largest shareholder of PacMin, and that facilitated my move 21 years ago to Canada. And I took up the role of president of Teck Corporation then, and ultimately of Teck Cominco after the merger.
So did that give you the hindsight in your because you're very difficult from my side on the financing side. I try to get the full 5-year warrant. You had nothing to do with it. Is that how you got your strategy and how you built up from Atlantic Gold to the experience running Teck? Because you have a different insight. So what did you learn from running Teck that you bring to the juniors? Because we're talking about two different paradigms.
Well, a lot of things, but I guess what one of our differentiators is that we have a team, and I have some relationships in the industry over the years, which allow us not just to identify and do a feasibility study and create a good idea, but in addition to that, the team that I work with have and will continue to look to develop projects, to build them on time, which is unusual in our industry, unfortunately, and on budget. And
which is even more unusual.
Sorry?
It's even more unusual building it on budget.
So to build it and to operate it is the other piece.
But what made you go from running Teck to a junior? Like, that's a serious change in lifestyle and everything.
I think Teck's a fantastic company, but I find personally that the greatest value add that I can bring or my team can bring is in the junior end, when you can start with an idea and create, as we did in Atlantic. We generated a 1,100% return in about 4.5 years by just doing what we do. Feasibility, construct, operate.
And let's bring everyone. So you took over a shell called Spur that became Atlantic Gold. Explain to everyone here who doesn't know you what you did in that 4.5 years with Atlantic Gold, and then we'll get into how you sold it for over 800 million.
Well, the key, the toughest thing was to identify the right projects, and you know, if we look at the industry generally, we found lots and lots of development projects, and there are lots and lots in this convention center, which appear to look valuable. And the challenge is that in some places in the industry there is what I call layer upon layer of optimistic assumptions in feasibility studies and technical studies that underlie the value of a project. And so our approach is a little different. We use, for example, geostats to do a resource estimation, and that's not something that everyone can do. So we have an advantage there. But you have to be really careful with what projects you invest in, and then you need to find the team, which is the thing that I know you, Maren, are very careful on and very particular on. The team that builds things and have done it before. Everyone in this hall will say that they can build or they can operate, they can develop properties, but not many people actually have done it and have done it successfully. And so like any industry, backing the right team is also important in addition to the quality and the technical nature of the project.
So now my favorite line is, you build it to keep it and you end up selling it. If you build it to sell it, you end up keeping it. So, you ended up selling Atlantic for over $800 million in a relatively crappy market. You did that, 11-bagger. I remember we went out for dinner in the summer of 2015 in Yaletown. You said, I'm going to do this. And I sat there and went, wow, like this is pretty impressive. And you did everything you said you were going to do. So now with Artemis, tell everybody what you're going to do.
Well, the approach is really not that different to the one we used at Atlantic. There's a bit of a dysfunction in the capital markets that follow this sector, and that dysfunction is the fact that junior companies typically trade for a development project at, say, 0.1 or 0.2 of their theoretical NAV, assuming it gets up and running and starts producing. And our job at Artemis is to find those good projects that are technically sound and then bring the missing piece to that equation, and that missing piece is the capital required. And it's a very capital intensive industry, as most of you know. And if you're not 300 or 400 million in market value, it's very hard to raise 50 or 100 or 200 or 300 million dollars. $300 million is probably the benchmark for most gold projects of any reasonable scale. It's hard to find that money. And I think the thing that in addition to our team that we can bring is that we bring our own capital. In Atlantic's case, the board and management own about 36% of the company. And that was as a result of us putting our own money into the project and having the support of other partners to do that. And then same thing with Artemis. The board owns about 45% of the company, and the significant cash position that we have is largely come from out of our pockets.
Okay, so when you named it Artemis, it's the god of hunting. To me, it's one of my favorite wines, an Artemis Stag's Leap. It's a fantastic wine. It won the 1973 Judgment of Paris. So you said when we sell Artemis, you're going to serve Artemis Stag's Leap wine for me. But that said, what is the business plan today? Why should someone look at buying, or why do I own 4.5% of Artemis?
Well, hopefully you made a good decision. But I think what we did at Atlantic and also in the other companies that I've been part of is repeatable because the environment, the circumstances which made Atlantic possible are still existing today. And those circumstances are the lack of capital, the lack of management teams who've done these things before, and on the other end of that equation, in the gold sector, the intermediate companies that produce 1 million or 2 million ounces, they're forever chasing, because their institutional shareholders tell them to, forever chasing growth, and that's hard to do for an intermediate company, to continue to find another 1 million or 2 million ounces and maintain their position in the intermediate ranks. And so I see part of my job, having been in that intermediate and senior end of management of bigger companies, is to find those things for them. And if they want to buy them by acquiring us in 4 or 5 or 10 years, and we create value for our shareholders in doing that, then that's what we want to do. So
what is the value proposition today for Artemis?
Well, Artemis has $33 million in cash, and we have a significant investment in a junior called Velocity Minerals, and it owns 70% in some properties in Bulgaria, southern Bulgaria. Its principal project is a project called Rosino. We think that project has the potential to be bigger. It needs to be demonstrated yet, and we hope that through exploration over the next year or two that will be demonstrated. And if we like what we see, we might consider owning more of it. If they don't achieve their goals, then we'll reconsider that strategy. But in the meantime, we're looking to acquire and bring that capital we have in our balance sheet and additional capital that the partners, being my partners, will bring to the company by investing that into other development projects and taking them through construction, commissioning, and operating.
So would you say that the situation of Bulgaria is very similar to the situation with the hub and spoke strategy that you had with Atlantic?
It's potentially that, yes. There's one deposit now, and there's some exploration targets that are within truckable mining distance from the principal Rosino deposit. So they actually came to us because they saw the potential in their own backyard of what we did in Nova Scotia. And just to clarify a little bit for your audience, the logic or the investment logic is if we are able to find something that is trading in the market at say 0.2 times NAV and then secure ownership or partnership with that project and then de-risk it with our team and our capital by taking it through engineering, construction, commissioning, et cetera, so that it ends up trading at 1 times NAV, not 0.2. There's a 4 or 5 times lift that we hope we can get, combined with a very clear focus on exploration, which will add to the resource.
Adds to the NAV, so you end up getting a 6 to 8 to 10 times banger on your price entry.
Yeah. That's the math, that's the logic. It may not work. We hope it will.
So one thing I want to share with everyone that you may have noticed, but I always flip over a bunch of projects to you because I have my own team working, whether it's Roman Schlenk or other geologists, and I go, I want to see how fast he responds. B, do I matter in his world? 2, how good are his analysts? Because I've had my guys go through it. And I got to say, you turn it around quickly within 24 hours, and you've been able to find the fatal flaws that took my team a bit longer to figure that out. So they're on it. It's not this bureaucratic, it takes forever to make a decision. So now in this situation at $15.50 gold, are you finding it harder to find these 0.2 NAV, 0.3 NAV situations, or are they out there?
It's always hard to find good assets that are technically sound. But the dysfunction that I talk about in the capital markets being, even though we've got a good gold price of $15.50 in US dollars and in Canadian dollars it's 2,000, and in Australian dollars it's 2,200, in Brazilian real it's something else. That's a really good price. So fundamentally, for the right project, there's a good value proposition. The dysfunction still exists, because the big institutional funds which re-rate companies to intermediate and bigger status won't invest in things that are less than $200 or $300 million market value because they've got no liquidity. They can't buy and sell. Their fund rules often prevent them from investing. So there's people like you and some of your followers and people like us and some of our partners who are open to those sorts of propositions and trust us, I think, to deliver on what we say we want to do.
So jurisdictional risk, I've been to Bulgaria and I think it's great. A lot of guys would be like, what, is that by Serbia? Are they in a civil war? Like, a lot of people are uneducated on the area. Tell me some areas you wouldn't go to, like South America. Is that, let's just say we find something there. Is your team going,
we think Africa is hard politically, but also jurisdictionally. If you base yourself in Vancouver, it's a long way to
a day and a half
travel to Africa. So Africa has got some great assets, but just too hard for us. I think you need to be based in London or Perth, Western Australia, or something like that. That's closer in time zone as well as in distance. Americas is our sweet spot, north and south. But there are some exclusion zones within that. Venezuela is the obvious one, but small Central American countries I think are challenging. You don't want to be the GDP of the country you're investing in, because you end up becoming
the opposition
or the government, and we provide medical services and all those other things. So I think you want to stay away from that. I think you want to be an important foreign investment, but you don't want to be the foreign investment.
But what about my old stomping grounds, the Carpathian Mineral Belt going through the Balkans and Serbia, Bosnia? Are you guys interested in that area, or is it just too politically?
Some parts of that are interesting. I've operated and built a mine called Oceanic in Turkey, which is at the southern end of that belt.
So today was the intro. Tomorrow, Stephen's going to teach us the secrets of how he goes about doing this. So tomorrow, I can't remember what time we're on it. Do you remember?
No, I don't, but I'll be here.
Yeah, so he'll be around. If you see him, ask him questions. Thank you so much.
Thank you.